You know, you start as the denier. It's not a good thing. And then you go to skeptic. Skeptic is it's too good to be true. So when I got to my skeptical phrase, I just asked, will it be banned? Will it be copied? Will it be hacked? I think 2020 to 2024 was the high volatility, high uncertainty. It's like that early stage of institutional adoption. But really, we start mainstream institutional adoption, I would date it to January 2024 with the approval of the ETFs, the spot ETFs. And I think we have about a 10-year gold rush. It runs to 2034 November. Between 2024 and 2034, we will have mined 99% of all the Bitcoin. So Bitcoin becomes, for all practical purposes, fixed by November of 2024. The last 1% comes out over 100 years. Okay, so we have this 42-quarter period where at the beginning of the period, right now we're like 94%. I mean, 5% is a lot. Over 10 years compared to 1% over 100 years. So there's actually still Bitcoin available for sale right now. The miners have to sell it. So at the beginning of this period in Q1, we're in Q1 now, if you go to January 1st, no institution could buy it even if they wanted to. It just wasn't on their radar. So you really have 42 quarters of people learning what it is, studying it. It takes 10 hours to scratch the surface, and it takes 100 hours before you get a degree of comfort. Most people, once they get past the age of 40, they don't want to spend 100 hours learning a new thing. It's very rare. You've got Wall Street firms spinning up massive education apparatus. You've got a whole set of stages of adoption. First, can I buy it? Then is it on the approved list for solicited sale? Then it is on the approved list for unsolicited sale. Is it marginable? Can I borrow against it? Is it optionable? Can I hedge it? Is it recommended? Is it structural? Is it built into a fund? That's like 7 layers of adoption. People take a year to think about each of those layers. There's 100 powerful entities that control huge amounts of money that'll go through that in the Western world. So I think we're in this institutional education stage, and in 2034, it'll simply be the new thing. Right now, there are 900 Bitcoin naturally produced every day available for sale, and the miners generally have to sell them. They have high electricity bills and high debt bills and build outs. Around April 20th, that'll be cut in half. That's 23 million a day or 20-something million a day. That's like taking $8 billion a year of supply out of the market. It will be the most consequential halving in the history of Bitcoin, in my opinion. It will create a squeeze. It means at that point, if the natural organic demand is in excess of 25 million a day, then there is no natural seller. It's very bullish for the asset class and for Bitcoin holders. I think there's a number of classes of sellers. The bankruptcy estates like FTX bankruptcy, Genesis bankruptcy, a lot of these people have billion-dollar positions of Bitcoin and other crypto assets, and they're not long-term investors. They're just looking to unwind and get their creditors whole or unwind the trust. So they're the big natural sellers right now, and they're getting flushed out of the system. And then I think the miners are the persistent natural sellers. Otherwise, the volatility in the system, it comes, the primary volatility is that Bitcoin is cross-collateralized and cross-traded with the other crypto assets. It's an unregulated market, traded offshore 24/7, 365. There are many, many billions of dollars of Bitcoin held offshore. There's $400 billion of ETH in the market cap. There's 80 billion and 80 billion of Solana and BNB right now. If you had $1 billion of crypto tokens offshore, you could post it as collateral and you could do a $10 billion trade in an hour on Saturday night, unregulated, unreported. So the Wild West, the number one source of volatility, in my opinion, is unregulated offshore after-hours crypto trading. The second, the lesser source of volatility is the options and the futures and derivatives market onshore during normal trading hours in the Western world. I stay in my lane generally, and I say you should buy Bitcoin, don't sell your Bitcoin. Bitcoin's good, I like Bitcoin. It's an ethical commodity. What I'll say about everything else is, is the rest of the digital asset ecosystem is a bunch of good ideas with a lot of regulatory uncertainty and competitive uncertainty and technical uncertainty. So they're all interesting ideas. Digital currency is interesting, it's very controversial. Digital tokens are interesting, they're very controversial. Digital securities are interesting, very controversial. Digital exchanges are interesting, they're very controversial. I have no recommendations one way or the other. When I started searching around and I discovered Bitcoin, I thought, okay, well, this is crypto gold, but it's got none of the defects of gold. It's got all the attributes of a big tech monopoly. It's better money than any economist has ever conceptualized in the history of the world. So I thought, this is kind of perfect money. I can't see it being more perfect. So the question is it going to be banned? Is it going to be copied? Or is it going to be hacked? You know, you start as the denier. It's not a good thing, and then you go to skeptic. Skeptic is it's too good to be true. So when I got to my skeptical phrase, I just asked, will it be banned? Will it be copied? Will it be hacked? And I stared at it, and the conclusion was, if it's understood to be property, not currency, then no, it's not going to be banned in a country that gives you property rights, which means it's banned in Cuba, it's banned in North Korea. If the world becomes communist and they deprive you of the ability to own things, that's an existential risk. But that's not a problem in Russia or China or the US right now. So not banned. Will it be copied? It was copied 10,000 times. They all failed. This is the winner of the 10,000 experiments. So it worked. And now, will it be hacked? And Satoshi's got 50, 60 billion dollars in a wallet out there, then that's the reward for hacking it, and no one's figured out how to get the money yet. So it hasn't been hacked, and I know it's able to store 60 billion without anybody hitting it. And so Bitcoin is the first time that we actually discovered a thermodynamically sound, mathematically sound economic protocol in the history of the world. So I think we will date things before Satoshi and after Satoshi. And I think that you can't think of it as a network or as a product. You have to look at it as a protocol the human race discovered, like base 10 math's a protocol, like the metric system's a protocol, like English is a protocol. And so this is the first sound protocol, economic protocol in the history of the world. And now once you understand that basic breakthrough, now the light bulb goes off. So I think all the smart money, all the smart people in the world that don't trust the bank, don't trust the currency, want to keep their money, they're all discovering Bitcoin. It's like all the smart people decided to use math and use this language. And now what happens in the future? Well, stuff will advance, but you're going to have a trillion, then a 10 trillion, then $100 trillion network. And if someone comes up with a new crypto algorithm and it's better, we're just going to fold it into this network. And if someone comes up with another twist or tweak, we're going to fold it in the network. It's like saying everybody uses English in the world of science and trade today, but English doesn't have a word for my widget, so I think we should all switch to Swahili because they've got the word. And my answer is, I think we're just going to put the word into English and we're going to stick with English. So Bitcoin is a protocol. It's going to go on a long, long, long time. And I think that as long as the world doesn't plunge into some Orwellian no property rights situation, I think we're good. Cardano and Ethereum aren't stable coins. And so Cardano has been designated as an unregistered security by the SEC explicitly in lawsuits. Ethereum is this massive gray zone. So at the end of the day, Bitcoin is the only thing in the world universally acknowledged by every rational, intelligent person is Bitcoin is a commodity. Everything else you're going to see people disagree on and fight over and litigate politically, and there's a war that will go on. And so what I think is there's 10,000 things that people are going to fight over. There's one thing that is institutional adoption. It's clear. So it's like asking me which of the 10,000 mobile apps would I suggest I should invest in. My answer is none of them, because there's a 99% failure rate in startups. So I'm not going to recommend you invest in a company. Which of 10,000 buildings should you buy? I don't know. Which of 10,000 pieces of art should you buy? I don't know. I mean, that's your business, right? If you want to do that, you do that. The only thing that I'm here to say is Bitcoin is a digital commodity. If you want global money, then it has to be a commodity. It cannot be a security. So the world is very complicated when you get into securities and other types of investments. The idea of Bitcoin is, what if we had a global money that was based on a crypto network that's decentralized and ethical? If you're trying to replace global money, if the question is which is the global money, Bitcoin's the global money. It's going to eat everything. There's no money in crypto. Probably the total amount of money invested in all the cryptos since the beginning of time other than Bitcoin probably isn't even $50 billion. My company's invested $7 billion. There's not a single person that's publicly disclosed who invested $100 million in any other crypto project in the last decade I can think of. So I don't think there is any capital there. The capital is in gold, real estate, art, corporations, the S&P index, and corporate bonds. And so what's really going to happen next is Bitcoin is demonetizing gold, silver, is going to demonetize a lot of real estate. Why would you put your money in the S&P index when 493 of the companies are failing?